The software rebound has begun. How quickly can these stocks come back? MarketBeat's Thomas Hughes joins us with his list of 3 software stocks he's loading up on ahead of this rebound. Thomas, great to have you here today. I know software is pretty much what everyone is talking about this week because this rebound is coming back really strong. We saw some huge gains on Monday. Tuesday opened with software stocks also very, very strong. Is this just the start of a massive rebound for this sector, or is it too soon to call this a rebound?
Oh, I think that this is the start of a rebound. I think that it will be quite large. I think based on what we were just talking about before we started shooting, if you look at Oracle specifically, because it was the one that really kind of triggered to the market that this rebound was underway. The stock price rose by more than 10%, really with nothing to drive it. No news came out. I think it was just somebody started buying and then led to another person and to another person. But the result was a pretty nice buy signal. But what you got to think about is, last year's price run up was driven by the market pricing in this robust outlook for AI. And that goes from Oracle all the way down the stack. NVIDIA, all the companies together, right? But since then, and especially in the software space, the market has priced in a whole bunch of fear. And that caused the market to correct, and Oracle's down real hard from its peaks. But now the market is kind of getting past these fears because, AI disruption, is it a possibility? Yes. Is it going to happen to some companies? For sure. But is it more likely that an AI modeler is going to disrupt Salesforce's business or Oracle's business? Or is it more likely that Oracle and Salesforce are going to use AI to boost their business? And so the reality is that these established companies are going to use these tools to boost their business more so than they will be disrupted. So that's the reality today. So now the market's going to reprice in that outlook, that big, giant, robust outlook. But you got to think that since last year, the outlook has improved. There have been new deals, there have been more spending, more outlook, more demand. So I believe that as we reprice in this outlook, we are actually going to price into a higher price point because the outlook's improved and it continues to improve.
I think the timing is really interesting with this, Thomas. Of course, the entire market is bouncing today because of some positive news about the war in Iran. But then this is also the start of earnings week. We had the first major earnings come out today. And so I'm kind of curious, do you think part of this bounce in software is an anticipation of what might be coming in earnings over the next few weeks and months ahead?
I think both of those factors are absolutely in play. The good news in Iran, kind of comes and goes, hot and cold running Trump. We talked about that before, but I think the market has begun to price in or believe that there'll be an end. However that comes, Trump's escalating, putting pressure. They see a deal coming down the pipe, so they're moving past that. That's helped the market be able to look more to the software story, which is this robust story. And then with earnings seasons coming up, we're going to expect to see a lot of strong reports and outperformances. Even with the analysts raising their targets for earnings and revenue, I think that the earnings season will provide quite a catalyst for more retail traders and for more market participants in general to buy into these stocks.
Yeah, I think that's the thing about software that's been so interesting is that these stocks have all been on a huge downtrend for really months now, for all of the first start of the year. But there weren't really numbers or evidence to back that up. It was all based on fear and sentiment around AI disrupting software, but we didn't see that in the earnings. And so that's why I think it's so interesting that these stocks are starting to see a small, the start of a rebound and a comeback ahead of these earnings reports and what we might see in those reports. So I think that that's really interesting. Another thing that is interesting is they've been in a downfall for so long that even though we saw, a 10% jump in a day, there's still so much ground to regain in what these software stocks
Right.
have lost. So what advice or what thoughts do you have for investors who are looking at, okay, did I miss this bounce? Did I miss the bottom?
Right.
We're just barely starting that V return of
Right.
a bounce back for these stocks.
So this bounce back, we are at the very bottom. This isn't going to happen like in a day or a week. It might take months or quarters, but ultimately what you got to look at is the valuations of these stocks with this sell-off and the persistent selling and the length of the sell-off. The valuations in many of these stocks are so incredibly depressed. We're looking at 50 to 100% upside potential just to get them back to nominal levels. So just the market coming back into these stocks and not being scared of them is going to boost their prices. And then over time, their results and the performance are going to continue to boost them.
But on the flip side of that, Thomas, I think investors still do have a fear of, yes, we're seeing a comeback and a surge this week in software, but is this really over? Is the downfall of software still a risk? Could this be just a short-lived little bounce? And I think that fear that you're talking about investors having about this sector is very real. And there's plenty of analysts who are saying, stay away. It's too dangerous right now. The future is uncertain. What are your thoughts on risk assessing, looking at some of these stocks right now, knowing that they are really at the very bottom?
You just have to weigh the risk versus the possibilities. And right now, with the valuation so low, with the expectations for results as good as they are, with the signs pointing to the strengths being real, the fears are kind of misplaced. And not to say that they're totally misplaced, but they've been overblown. The market sell-off is way overextended. Software stocks and tech stocks and the market in general, I think, is ready for a pretty solid rebound just because of the low depressed valuations.
Oh, very good. There's a lot of rebounds happening, not just in software. If you want to hear 5 stocks that are leading the market's rebound right now, a lot of it in that AI tech sector, make sure to check out this brand new article on marketbeat.com. It's just for our premium subscribers, but for our YouTube viewers, you can get a free look at this article. So make sure to scan the QR code or click the link in the description to get that list of 5 stocks that are really leading this rebound this week right now. All right, Thomas, let's get into the 3 names that you are watching very closely in the software story, especially as this rebound begins. And let's start with the first one. This might have been the biggest bounce that we saw starting out the week.
Well, right, that's Oracle. Oracle is pretty much the leader for the software stocks. It saw the biggest price surge last year. It saw really a big price decline this year. And this week, yes, it did see the biggest price movement. Like I was saying before, though, there wasn't really a single news event that triggered this. The market has been at bottom for a little while. Somebody or something started to buy the stocks, and it just triggered a pretty broad market response. Shows that lots of people were waiting to buy this name when the signal came, and that signal is pretty solid. We have a nice large green candle confirming support at the 150 level. It's moving up above critical moving averages, has the indicator set up for a momentum swing, which to me will be a sustainable movement and could possibly lead this market into a multi-quarter upswing over the following quarters and likely to be triggered by the upcoming earnings release.
Yeah, it's had such a huge bounce just in the last 5 days. It's up over 20%. So it's a great sign of recovery. But this one in particular has so far to go. This stock started going down before the other software stocks did. I think the real software downfall kind of started in January for most of the sector, but Oracle started that downfall since September. It reached a high in September, over 325, and it's nowhere near that right now. Do you think it's going to recover all of the ground that's been lost since then?
Oh, for sure. Because that surge and then the price pullback is driven by, like I said before, the outlook for revenue growth, and then offset by the taking on of debt. Taking on a lot of debt to help pay for these data centers, to help pay for this infrastructure, to be able to supply all of these software services has had a big impact on market sentiment. But when you look at things, the debt is growing at a far slower pace than the revenue. As far as Oracle's concerned, the backlog is growing at about 5 times the pace as the debt. And the backlog is just the initial contracts for the initial build out. That's not even taking in the long-term revenue potential from these data centers that it's building. So really the backlogs are swelling. And in some cases, names like Nebius, which is more of a GPU as a service provider, its backlog is growing at about 50 to 1 pace versus its debt. So right now, the debt is a concern, caused the price action to pull back, but longer term, the revenue growth outlook is so robust that this market will absolutely be able to reclaim this lost ground and then move higher.
Yeah, when you look at what analysts are saying about this stock, you can absolutely see they are also bullish on this stock moving higher, but not moving much higher than that high it hit back in September. We've seen some price target reductions on this stock over the last few months since it's been on this downtrend. At one point, there were some saying that the stock could go over 400, and now those analysts are moving that line back to that 320 range, which would be recovering to those highs it's seen in the past. What are your thoughts about the analyst action, the price predictions on where Oracle could be heading?
All right. So the analyst revisions certainly have had a negative impact on the market and helped the market to retreat. But as you're pointing out, they're still pretty robustly bullish. We've got 40 analysts tracked, 30 of them rate as a buy, only one as a sell. Consensus is for 60% upside. Even the low end of the range is providing some support. But the revision trend still suggests double-digit upside, and that just shows the analysts see upside potential when we get that catalyst, which will come with the upcoming release, potentially causing the analysts to begin raising their price targets again. That'll just help, juice the rebound, help juice the market, and get it looking at that consensus as being a viable target. And right now, that's 60%. That's a pretty good upside.
Yeah, I think when investors look at the upside potential in a lot of these software stories, it does look intriguing, but I do think that there is still that risk to be aware of. Everything you said shows that this stock should be recovering, but then there's that other debate of, do you believe in the AI growth story? Oracle's investing all of this money into these data centers. Some naysayers out there are saying, well, all of this investment won't pay off in the long term. I'd love to get your take on that.
Oh, I mean, I think that it will. Right now, the numbers speak for themselves. I mean, because the cost that we see up front right now is far less than what the backlogs are. The backlogs, like I said, are just the tip of the iceberg as far as the revenue generating potential. So people that think that this isn't going to pay for itself are completely discounting the trends, which show, accelerating demand for all kinds of things AI. I mean, infrastructure, services, software, hardware, it's all accelerating. And there's really just not an end in sight based on the news stream.
Well, very good. Let's move on to the second name that you are looking at. And this is another of those software stocks that I know you've been bullish on, not just during this downfall, but really for the last year or two.
Right. That's Salesforce. This company is so well positioned for the age of AI and agentic AI. It's ridiculous that its price has pulled back the way that it is. The recent news stream has shown expanding client base, penetration of services. It's been at some recent tech shows where analysts have walked away saying that they're clearly displaying productivity boost, truly affirming this company's place in the world of AI, its utility for businesses, kind of affirming the company's own forecast for its growth to accelerate back into the double digits. So again, we're just, looking at a market that's sold off to extreme levels based on fears, misplaced fears. We're just waiting for the catalyst to trigger the rebound. I think it's going to come, and if not this upcoming report, then one very soon. And the rebound potential is pretty strong.
I think what's so interesting with Salesforce is what you're talking about. There's clearly they have a product that is working really well, that's providing a benefit to businesses, and that's why they're implementing it. And that shows up in their earnings. They had a late February earnings report, and it was a big earnings beat. And that was at the same time the stock was really tumbling down so much. And now we have another month or two to wait. They don't report again until the end of May. But I think the numbers and the earnings seem to be there. So why do you think the stock has continued to tumble, even though it has the earnings and the revenue to back it up?
It's just a case of the market not being interested. In this case, it's driven by fear, compounded by the war in Iran, but it's just the market not buying. But again, it's opening up a really wicked hot opportunity because the valuation on this stock is really, really low. Right now, it's trading at only 13 times its earnings. It usually trades closer to 30 times earnings. So that's almost a 200% upside just based on valuation. Meanwhile, while the stock is down at these extreme low levels, the company has initiated an accelerated share repurchase program. It's the largest accelerated share repurchase program in history. It's $25 billion. And so that's just going to provide a lot of leverage for this stock on the move up. So assuming that all things had remained equal and the company affirms its outlook, the stock price would be able to move higher and trend back to new highs. But now what we're looking at is a case in which the share count has been greatly reduced. So shareholders have significant leverage on this upswing. So I would expect to see the upswing really gain momentum quickly and move to new highs, possibly before the end of the year.
This is another one where I don't want to talk about any of the stocks today without also addressing the potential risk and maybe the fears that investors might have about getting in on a stock that's had such a tremendous downtrend. The stock has tumbled over 35 or roughly 35% in just a few months. So that's a big drop. And there are still some fears about getting in. And that is the sentiment that really made the software sector tumble in the first place. And that's, could AI replace the value of what Salesforce has to offer? I think one of those fears stems from there's so much rapid advancement in technology and in AI right now that it's hard for the entire market to kind of see where could this story be going?
Right.
What will AI replace? What will it boost? What will it help? And what will it actually make obsolete? So let's talk about that fear a little bit, especially when it comes to Salesforce.
Right. So something to keep in mind is that demand for AI infrastructure for the modelers, for the trainers, for the people that could potentially be disrupting Salesforce's business is so high that capacity is not matching it. We've got AI companies, Microsoft, OpenAI, all the big boys are curbing their plans for training advanced models because they don't have enough GPUs or capacity to do it. So if you're thinking that these people are going to be able to disrupt CRM's business, they're going to have to build their data centers first and then train these models. So we're talking 2-3 years down the road before it can even happen. In that time, Salesforce is going to continue to use the AI tools that it has, continue building its platform, continue delivering utility for its clients, continue gaining market share, continue driving cash flow, and continue buying back shares. And to me, all of those things are good for the stock price.
It's a really great argument for how long this AI replacement theory would actually take. The build out is not short. Training these models does not happen overnight. So I think that's a good level headed approach to looking at what could happen with the software story down the road. I think it's also a good argument and making a great case for AI continuing to grow over time as well. Again, if you want to look at those 5 other AI tech stocks that are really leading this rebound right now, because we know software got hit, the entire AI sector has been hit over the last few weeks and is now starting to see a rebound. You can check out this article on marketbeat.com for free. It has a list of 5 stocks to watch right now. You can scan the QR code or check the link in the description to get that article again. All right, Thomas, let's move on to the third stock. And I think this is the most controversial one on your
Right.
list. Also, one that you have been very bullish on for years now.
These 3 names I picked intentionally because we have some blue chips. We've also got an emergent tech, and that's SoundHound. So, part of SoundHound's problem stems from the SAS fears of disruption, but also because it's not been making a lot of money. It's been burning cash. And so companies in that position have been hit harder than some others. However, in the news flow, we have the company expanding penetration, gaining new clients, having its technology affirmed. It recently expanded its deal with Qualitas. Now, instead of being kind of a test run to see if it works, Qualitas is launching this as an end-to-end solution for its claims resolution. So no longer in the testing phase. This isn't fully affirmed deployment phase. Really has a bullish impact on SoundHound's revenue outlook. But then at the same time, analysts are still kind of slow to get on board. They're still kind of like, meh to the name. And so there's potential in there for this stock to continue wallowing near its lows. But as the results start showing this traction, I would expect to see analysts get back on board and start driving this market higher again.
I'll have some more questions on what it would take to actually see a rebound in SoundHound, but I want to start with the biggest elephant in the room with this one, and that is how much money investors have lost on this stock. This is one I added to my Bridges Buys watch list. If you have not followed along with that, I pick one stock per video that we talk about to add to this watch list and follow how it moves over time. SoundHound was one of the names you were really excited about at the beginning of the year. I added it to my watch list. It is now down almost 35%. It's been a huge hit to the watch list performance, and I'm sure investors who've bought this stock anytime in the last 6 months or so have had a hit to their portfolios because of the stock's continued downtrend. It's really been on such a downward spiral for a long time. So let's talk about that. It seems like we're doubling down on a stock that's been struggling for so long. Why still positive, even though it's had this rough track record since October?
Being a speculative stock, expecting some big swings, potentially swings that are going to go against me, I'm not just going to give up on this name because the stock price moved lower. I'll just watch the news flow. I'll watch the technical action. And then if we see another opportunity, try to get in again and see if we can catch the upside this time. Set a stop loss. We want to control the downside losses, but also try to get in to capture those gains. As the stock price moves higher, assuming that it will, we're going to want to, take profits off the table periodically as well. And that's all just part of money management, especially when talking about these speculative names.
Wise advice when looking at the speculative stocks, even in the software sector. I am really curious to hear what investors think about a continued recommendation of SoundHound because it's been so rough on portfolios. But I also want to point out, you're not the only person who's still bullish on this stock. You look at the analyst forecast, and there's plenty of analysts in the last few weeks who have said, yeah, we also believe in this company.
Right.
One of the analysts, the most recent one back in March, did lower their price target, but they lowered it from 26 down to 20. So they still see,
Right.
this stock more than doubling in the next year.
Well, right. And at the same time, institutions are buying. They've been buying at a pace of 3-to-1. So that's solid accumulation. Their total holdings are still kind of low, but it shows that they're buying the stock, and it certainly will help limit the downside, help amplify the upside. And, again, just waiting for that catalyst to come out. With earnings seasons just ahead, it could come out any day.
Yeah, let's talk a little bit about what that catalyst could be. What's it going to take to get this company to actually reach that potential that so many analysts are predicting for SoundHound?
It'll be a clear pathway to profitability. Right now, the pathway to profits is kind of dim and murky. It is there, but what we're going to need to see is some surging revenue growth and improving margins, controlling costs, and just a better pathway to profits.
All right. Well, Thomas, thank you so much for breaking down what's happening in software right now. There are lots of opinions about what to do with software. If you want to watch one of our most recent videos on the software sector and where to look for value from the perspective of some accountants, make sure to check out this video here.